Hi, I'm Jenny Brown. Welcome to our weekly buy-to-let mortgage market update. I think it's fair to say that Wednesday is the first day of autumn. I got up this morning, it was actually raining, and you'll see in the background we've got lights on. So I think we're fully into the autumn months now, which is, change is as good as the rest and all that, right? So look, in terms of what's been happening this week with regards to lenders. So last week we talked about the fact that lots of lenders are repricing, particularly in the more vanilla end of the space. A lot of the lenders' names that you mentioned then were those that you would associate with being more high street institutions. What we've seen this week, conversely, is a swathe of repricing downwards for the more specialist lenders, which is great news because particularly for our client bank, lots of these guys are limited company borrowers, HMOs, multi-units, portfolio landlords, that kind of thing. So these guys, these more specialist lenders really fit into a lion's share of our market. So the first lender we've seen reprice downwards is Precise Mortgages, and they've now got rates starting at 3.14%. And they have products up to 75% loan to value. Now, Precise Mortgages are a lender who will lend to limited companies and individuals. They don't have a maximum number of properties in the background, and they're able to lend on HMOs, smaller HMOs and multi-units. Now, the things that I particularly like about Precise are firstly, they don't have a minimum income requirement, which is quite important for some of our landlords. And also they have a really good rental calculation on the background portfolio. And we're going to talk about that a bit more today in some more detail. But really the background stress that they use is quite bespoke, and actually it tends to be maybe a little bit more accommodating than some of the others. So really good news to see Precise bringing their pricing down and really launching themselves back into the market. Now, in addition, we've also seen Kent Reliance reprice, and they have rates now starting at 3.04%. Now, Kent Reliance are a great lender, definitely more of a lender who will look at applications in the round. So their sort of processing is not necessarily computer-based. There's a real human interaction with the applications. So they are able to offer a loan-to-value of 75% up to £3 million. They're happy to lend to SPVs and people as well. There's no maximum number of properties in the background, no minimum income requirement, and they are able to lend on HMOs of up to 6 rooms and also multi-units. So again, we're really pleased to see Kent Reliance bring their pricing down and really come into the market. Also this week, there's been Landlords releasing a couple of special edition products. They now have a 2-year fixed rate at 2.95% to 60% loan to value. Now again, Landlords can lend to limited companies and people. They don't mind how many properties you've got in the background. A couple of other pieces of lending criteria which I quite like. So first of all, maximum age application is 79, and they also accept day one remortgages. So some really nice USPs there, which tie in neatly to some reduced pricing. Lastly, from the specialist lenders, we've also seen Foundation Home Loans make reductions on their rates of up to 60 basis points. Now, Foundation Home Loans, and you're going to see this real theme here with these lenders at the moment. So again, personal borrowing and limited company applications are also fine. They don't have a maximum age at all on application, which is very, very unique. So you could apply for a mortgage at age 90, if you wanted to, which is really good. They too don't have a minimum income. They have no limits on the background portfolio, and they are able to lend on HMOs of up to 8 rooms and multi-units of up to 10. So really good to see, again, those lenders who play in the more specialist end of the market bringing their pricing down. We talked a bit before about why the pricing had gone up sort of towards the beginning and mid of lockdown. And the reasoning was largely due to, first of all, them simply not wanting to be swamped with applications. These lenders tend to be smaller institutions than a NatWest or a Santander. So they don't have the large number of bodies. And so when they have to move a percentage of their staff around the business to cope with, for example, mortgage payment holiday requests, it really has a knock-on in terms of the headcount who could actually underwrite applications. The other reason they pushed their pricing up would have been linked to the capital markets closing, the cost of funds on the money markets, and that's had a knock-on effect in terms of the rates that these Kent lenders can offer. Thankfully, this seems to be moving along. The capital markets are open, securitisations are happening, which means that fundamentally the cost of funds starts to come down again, and that's now been passed on to our clients, the borrowers. So great news there. The only other repricing we've seen this week, two more pieces. So we've had Kensington repriced downwards with up to 0.5% reduction on their buy-to-let range. And we've seen Virgin Money increase their 5-year fixed rates at 80% loan to value by 0.5%. So lots of movement on pricing. It is a bit blink and you miss it at the moment, I'm afraid. But at least this week we're reporting some positive moves in terms of downward pricing rather than the last week news of upward pricing. Moving on to the lending market more generally, I wanted to share some data with you because I think it's really important to give context around data at times. So UK Finance have released some information or data which covers up to July 2020. And what they have said is that in that month of July 2020, there were 4,200 new buy-to-let purchases completed, which is 29% less than the same time last year. They also reported that there were 14,000 remortgages completed, which is 9% less than the previous year. Now, this information, if you took it on face value, would largely fly in the face of all the reporting that you're hearing and we're also doing in terms of, loads of transactions happening, house prices going up and all this kind of stuff. And I just wanted to explain to you where the difference comes from. So the data that the UK Finance are releasing here is based on deals which completed in July. Now, if you think about the timeframes that kind of go into a house purchase or indeed a remortgage, you're looking at realistically anything from a 6-week to a 4 or 5 month lag. So actually, what we're not saying is that actually buy-to-let purchases, as in offers accepted, were down 29% on the previous year. Actually, they're up this year. This is actually completed deals. So it's actually very natural to expect the numbers to have come down because a lot of these transactions would have started right in the middle of lockdown. And if I'm going to be really candid with you, I'm actually surprised that actually the difference isn't greater. So really, this just has kind of made me think that the market, the buy-to-let market, is a lot more robust than some people would give it credit for. Next up, housing news. Two bits of news I wanted to share with you this week. So first of all, we had the very good news that the Help to Buy scheme in Wales, which was originally set to end on the 31st of March 2021, has been extended by 1 year. And actually, they've even announced plans to extend it by a further year if funding is available. Now, what I would say is the house price cap will be reduced from £300,000 to £250,000. Now, to give some context around this, a total of 10,215 homes have been bought using this scheme in Wales since its inception, which really goes to show how many people this has really helped. Now, the Help to Buy scheme doesn't just actually help first-time buyers. The other people who really benefit from the scheme is developers. So we're really pleased to hear this news. Now, the other piece of information I just wanted to share is that UCAS has published its 2020 applicant figures. Now, this year there were 652,790 applicants for university spaces, which is actually higher than the figures reported in 2019 and 2018. Now, you may be aware that owing to the A-level grading system, among other things, universities have been oversubscribed this year, and indeed some are actually even offering financial incentives for students to postpone for a year. So I think really the message here is that if you are considering a student let as an investment, these numbers really show that the requirement for student housing is actually increasing and not being decimated because of COVID, as has been reported on some places. So yeah, demand is growing and really, really strong. So again, really positive news for our student landlords. Now, this week, I did promise to talk to you about limited company lending, but actually I'm going to pause that this week and actually talk about mortgages for portfolio landlords. And the reason I wanted to cover this off, first of all, is actually it's a subject we can cover off in 1 week, first of all. But also I think there's quite a lot of misunderstanding in the market, probably largely due to sort of reporting in the press, if nothing else, with regards to how being a portfolio landlord impacts your ability to get a buy-to-let mortgage. So, the definition of a portfolio landlord is someone who has 4 or more mortgaged buy-to-let properties. And I think the key here is the word mortgaged. So if you have 6 unencumbered properties, you're not actually classed in the context of mortgage applications as a portfolio landlord. Now, if you were an owner of 3 buy-to-let properties and you were purchasing your 4th, because by virtue of the fact that on completion of the mortgage you would have 4 mortgage properties, you would still be classed as a portfolio landlord, okay? Now, what does this actually mean? So in terms of being able to get a mortgage if you are a portfolio landlord, I mean, first of all, the very good news is, yes, you can, absolutely no problem there whatsoever. The difference for you guys is that you're just going to have to provide a little bit more paperwork than you would ordinarily if you had less than the four. So in terms of the paperwork you're going to be asked to provide, generally speaking, you will need to provide a copy of your property portfolio. And this is something which is relatively straightforward. So address, how much you owe and to whom, the rent, that kind of information. So really basic. And actually, in my experience, most landlords do have that information already recorded on a spreadsheet somewhere. However, if you don't have one and you'd like a template to work to, we do have copies of these, which we're very happy to send out, which you can fill in. And these spreadsheets, or this portfolio template that we use, is accepted by most lenders. So portfolio spreadsheet is the first thing. The second thing is you may be asked to provide either or both of a business plan and cash flow forecast. Now, this sounds quite terrifying, I appreciate that, but the really good news is that actually lenders will provide you with a template to complete and you simply fill in answers. They're relatively straightforward. In terms of what lenders are looking for, I think realistically they're just trying to understand and get under the skin of your plans for the future to make sure that you've really considered things like rental voids. If you are planning some large property improvements to your portfolio, then actually how are you going to pay for it? Will you have the money in place to cover any tenancy or absence of tenants while this work's going on? It's that kind of thing. So really, there's no right or wrong answers when you fill out these forms. It's more about just showing that you've kind of considered the future and how it's going to look for you, and also that you have the means or measures in place to ensure that you can do that without causing yourself any financial difficulty. Now, the next thing that comes with being a portfolio landlord is the background stress test on your existing portfolio, which we alluded to earlier on. Okay, so what this actually means is that when lenders are looking at your mortgage application, they're not going to be simply looking at the rental income that the property on which they are lending is going to achieve, but they're going to be considering your existing portfolio more broadly. And what the lenders tend to do is apply a rental calculation to the background portfolio in the same way that they apply a rental calculation to the property which you're asking them to lend on. Now, and again, going back to these rental calculations, it's not that straightforward. So some lenders will just say, your existing portfolio needs to have rental income which covers at 145% of 5.5% for personally owned properties, or 125 at 5.5% for properties held in a limited company. If only it were that easy, actually. So what some lenders can do is they will allow a slightly more favourable stress test for properties which are on 5-year fixes. Some will impose more onerous rental calculations for those properties you have in the background which are HMOs or multi-units. So it's really quite complicated, but again, it's not beyond sorting out. But realistically, the reason that getting a very, very comprehensive and updated portfolio spreadsheet is that when we have a look at it, we can do the maths on it and make sure that the lender we're approaching is going to be comfortable with what you have in the background and make sure we don't come in unstuck down the line. Now, as I mentioned, there are some lenders who have a kind of published criteria. We just need the portfolio to stress 145 at 5.5, whatever it may be. But actually, there are some lenders who operate a more complicated calculation as well. So a bespoke calculation. And one of the lenders we talked about earlier on was Precise Mortgages, who use this model. So they don't actually publicise their calculation. They simply say that we feed in the numbers and they do some kind of magic in the background and let us know whether it's affordable or not as well. So as you'd imagine, some of these things are quite complicated, but this has been around for a long time now. So actually, in terms of the broking community, it's something we're very familiar with and comfortable with and able to work to. Now, one of the questions we get asked a lot, which is a very good question, is, what if I own some of my properties in a company? Are these classed in terms of my kind of head count for being regarded as a portfolio landlord? And the answer to that is that in the main, yes, they are included. You would be expected to state properties owned in a limited company as well as personally owned ones when you're doing your portfolio spreadsheet. Now, there are a couple of lenders out there who will only lend to individuals who actually then disregard properties owned in a limited company when classing you as a portfolio landlord. So again, if you just assume that the answer is yes, they're included, but know that there are, as always, exceptions to the rules. Now, in terms of mortgage availability to portfolio landlords, so yes, there is a bit more paperwork in the background, but I mean, it's fine, honestly. It doesn't hinder things at all. Are mortgages available to portfolio landlords? I mean, yes, they are, absolutely. But my view on this is that actually the number that people need to be thinking about in terms of mortgage availability is not 4 properties in the background, it's 10. So there are some lenders who simply will not lend to portfolio landlords. And it's only a few lenders, but there are some in that position. But actually what you will find is, particularly when you're looking at borrowing in your personal name, where things at the dial really changes is when you own 10 buy-to-let properties, because some of the lenders who are very landlord friendly will lend up to 10 in the background, but no more. So that's a number that I think is actually probably more pertinent to you rather than the 4 number. So there you go, portfolio landlords in a nutshell, which I hope is helpful. So that's it from me on this rainy autumn Wednesday. A chap called Gary commented on our last video. Gary, thank you very much for your comment. Just asking us if we would consider doing some information on holiday letting and holiday let mortgages, which we absolutely are going to be covering off in the future. We haven't got that penciled in for a few weeks yet. But in the meantime, Gary, our marketing team are going to post under this video some links for you to various information on our website, which might be helpful as a stopgap. But thank you very much for your comment. And absolutely, yes, this is something we'll certainly be looking to do in the coming weeks. So yeah, that's it from me this week. Thank you so much, as always, for joining us. And as always, you can always give us a ring if you have any questions, 0345 345 6788, or do go to our website where we have lots and lots of information, www.mortgagesforbusiness.co.uk. And I will catch you again next week. Look after yourselves.